Have you ever found yourself locked in a secured loan and wondering how to get out of it? Well, you're not alone. A lot of people find themselves in this exact predicament. But here's the thing. There's a way out and you could be missing it. So let me unravel the secrets of escaping a secured loan. First, let's clarify what a secured loan is. A secured loan is a type of loan where you provide an asset as collateral. If you fail to make repayments, the lender has the right to take and sell your asset. So before getting a secured loan, it's crucial to understand how much you can borrow and the associated costs without damaging your credit score. To minimise risk, borrow as little as necessary, save beforehand, and look for loans with favourable repayment terms. It's all about reducing the risk of defaulting. But what happens when you can't make a payment? Well, the first step is to communicate with your lender. They may be willing to renegotiate terms such as interest rates or the repayment period, making your loan more manageable. Now, there are other options to consider when trying to get out of a secured loan. You could sell your asset, renegotiate payments, or explore debt consolidation loans. But remember, always ensure your loan is with a company authorised and regulated by the FCA, that's the Financial Conduct Authority. That's to avoid scams. So back to the original question. Is it possible to write off a secured loan? While it's extremely rare, a lender could agree to do so. However, secured debts can't be included in a debt relief order. That's a mechanism for writing off some debts if you have low income. Secured loans also can't be included in debt management plans. So how can you really get out of a secured loan? Renegotiate your payments, sell your asset, or consider a debt consolidation loan. The best option will depend on your personal circumstances and finances. If you're struggling to pay any type of loan, it's crucial to seek free debt advice. In the UK, for example, you can reach out to a debt charity. Remember, the goal is to make your financial situation manageable and to avoid getting trapped in a cycle of debt. Let's pause for a moment to consider the true cost of a bad secured loan. Imagine a 30 grand secured loan at 4% over a 15-year term. That's £221 a month. But at 5%, it's £18 more per month. It sounds trivial, right? Well, over the full term, that's an extra £2,916. Think of all that money you could be saving. Secured loans work similarly to unsecured loans. You receive a lump sum and repay it in monthly instalments over a certain period, which could range from months to over a decade. You might be allowed to pay off the loan early, but be wary of early repayment charges. Secured loans are risky because your asset is at risk of repossession if you fail to make the payments. So borrow as little as possible and seek a loan with good repayment terms. While these loans can offer more credit and sometimes lower interest rates than unsecured loans, they come with a catch. You won't receive any money back after paying off a secured loan. But what if you can't pay your secured loan and default? Well, the lender has a right to repossess your asset and sell it, sometimes at an auction. If you've missed a payment, then don't panic. Communicate with your lender and explain why you couldn't pay. They'd rather reach an agreement than seize your asset. This might involve changing interest rates or extending the repayment term. So to sum it up, to escape a secured loan, understand how they work, communicate with your lender, and explore options like selling your asset or debt consolidation. You can also seek help from a debt charity. Your financial freedom might be just a few steps away. If you're interested in finding a debt consolidation loan for your circumstances, simply click the link below and fill out the short form. It contains a few questions like whether you're a homeowner and how much you'd like to borrow, and will give you access to quotes from around the UK tailored to your circumstance. It's totally free to do so, and of course it won't affect your credit score. So click the link below and fill out the short form to try it out.